check this out. This is just insane. And it might answer your question, can one bank, can one fund, can one person have a noteworthy impact on markets in general? Is like one entity big enough to do that type of a thing? The answer is a resounding yes. And no matter how bad your day is, no matter how bad my day is, probably not as bad as this person's day. Citi admits a trader error sparked a flash crash that sent Swedish stocks plunging 8% and European shares humbling. Sweden's benchmark, the OMX 30 stock index, crashed 7.9% in morning trading on Monday before quickly rebounding, leaving investors shocked. On Monday, one of our traders made an error when inputting a transaction. Within minutes, we identified the error and corrected it. That's a big fat finger mistake. Just like one little issue, let's crash an entire index 7.9%. The sell-off quickly spread to other markets on Monday, with shares in Germany, France, Norway, and Denmark also following sharply before rapidly recovering. The continent-wide Stocks 600 index finished 1.5% lower on fears about the global economy. So this one little oops, typed it in wrong, billions of dollars. And it also produced a crazy amount of volatility, but the story actually gets a little bit more nuts than that, because the NASDAQ and the Stockholm department of NASDAQ is saying, hey, sucks to be you if you lost money on that. NASDAQ Stockholm, the Nordic country's main stock exchange, said it would be not canceling any trades from Monday, raising the prospect that the mistake could hurt Citi financially. NASDAQ is continuously investigating all market movements on the marketplaces, and we have done the same in this situation. The reason for the drop was a sell event by a market participant. I had not identified any disturbances in NASDAQ's system. So what they're saying is it wasn't actually a market issue. It was some big player. They made a mistake, and I kind of understand where they're coming from. It had nothing to do with the actual exchange. It was just a player put in way too much of a size, and it caused a rapid sell-off that was quickly bought up. Huge volatility, massive percentage swing, and it's probably going to lead to people getting fired. NASDAQ has not seen any reason to cancel trades that were made during this event. Once again, at first, that might seem a little bit like, wait, what the hell? But if you think about it, the exchange worked as it should have. It was just one random trader made a big old mistake that caused a huge stock plunge and most likely accounted for billions and billions of dollars. And as we saw, it actually bled into other markets, Germany, France, Norway, and Denmark. Crazy. So I think this is a little bit of a silver lining. You might be thinking that you're having a bad day. Probably not as bad as this trader, who I would assume is no longer employed whatsoever.